네, 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 지난주에는 ETF에 대해서 자세하게 설명을 드렸었죠. 오늘은 그 ETF에 대해서 특징과 차별화 지점 그리고 활용 방법에 대해서 살펴본 뒤에 이 값싼 거래 수수료로 ETF를 실질적으로 살 수 있는 방법에 대해서 연이어 이야기를 해주신다고 합니다. ETF 투자 이야기만 듣고 어떻게 활용해야 될지 모르겠는 우리 투자자분들에게 도움이 될 것 같은데요. ETF에 대한 내용 지금 바로 만나보시죠.
So last time we talked about what an ETF is, how it differs from a mutual fund, why people like it, and what the characteristics are. Now what I want to do is to get into specific ETFs and show where they are and what kind of ETFs you can buy and how they cover all sorts of areas of the market, investment styles, asset classes, all sorts of different things. So what we want to look at right now is let's just look at, just really simple, okay? The ETFs that we take a look at, not this week, but the previous week, what the inflows and outflows were for some of the biggest ETFs. And what we can see was the total stock market ETF, there's a total stock market, not just S&P 500, but covers everything. NASDAQ's, technology, large caps, small caps, that sort of thing. Big, mid cap, which is just underneath, or just above small caps, had a good inflow, okay? And then you go down here and you can see that the 1 to 3 month Treasury bill ETF had some growth. And then we can have value ETFs, Treasury bond ETFs, more value ETFs. Those are what we saw inflows that week. Now remember that this is the week before the Fed rate hike. So those are the kind of things that we saw coming in. Fairly defensive, short bills, value plays, that sort of thing, and overall stock market. When we look at the redemptions, now we'll see something interesting. So substantial redemptions out of the spiders that week, okay? High yield bonds, another one, and corporate bonds. So corporate bonds and high yield bonds have a theoretical equity component to them that you don't see in government bonds because obviously they're rated with the credit quality of that company. And high yield bonds have an affinity to trade a lot like stock market does. So when you have a rising rate environment and a declining stock market, high yield sector really, really does poorly. And we saw a significant amount of redemptions out of that thing. We also saw some high yield corporate bonds going down, some more senior loan stuff going out, so some small corporate bonds. So what we saw here, and a little bit of energy sector, because now we seem to be breaking down in that energy space. And I'll talk about that in a couple more pieces here as we go down the road. But that's what we saw, and that makes sense what we saw in a week where we knew the stock market was down fairly significantly. So let's look at what types of ETFs we can buy. And let's just think about what are the biggest ETFs, period, regardless of the asset class they're in. And so you can see that they're substantially equity-based and bond-based, and that's about it. And so what we have is spiders, S&P 500, right? The core S&P 500, total stock market. So this is what people buy to be able to gain exposure into an overall market because they want to say that my portfolio went up, the S&P 500 went up 17% this year, my portfolio went up about 17%. They don't want to say the S&P 500 went up 17% and my portfolio only went up 5%. We can also look at now equity-only ETFs, and we can see the different kinds of equity-only. So these are not just the largest ETFs, these are the largest equity-only. So we can see, obviously, the top top five. Then we've got a value ETF right now that's fairly substantial at $95 billion worth of assets. Developed markets is pretty interesting. I'm surprised that that's where it is. That's different than emerging markets, but that's still a pretty good one. emerging markets down here, that one kind of throws me, but that's how people get into emerging markets. And now we can see that the growth, which is usually much higher than the value, is like a third the size of the value. And that's because people have been buying more value-oriented stocks in a defensive mode this year as opposed to buying growth stocks this year. When we break it down by inside of equities, then we'll look at investment strategies, right? We can do growth, we can do mid cap, which is just above small cap, Russell, which is small cap growth, technology. This is a technology sector. Again, healthcare, growth ETF, a quality factor. Quality factors are if you can identify the factor bases that you want to use, say, for example, increasing dividends, increasing earnings per share on a quarter-by-quarter basis, increasing analyst estimates of stock prices 6 months out, that sort of thing. You can identify factors and get into an ETF that basically tries to find factors that are positive to stocks and pick stocks based on those factors. Healthcare and consumer discretionary. So different investment strategies. And that was just in the growth space. So now what I can also say is let's do an industry space. Let's think about whether it's real estate, whether it's energy, whether it's technology, whether it's industrials. And I just picked energy, for example. So, and energy we know had a really good year so far this year. So we've got an overall energy fund, a North American pipeline fund, a small cap energy fund, a China energy fund, and a Russia energy fund. Obviously the Russian has had a very difficult time. But the balance of these things that all have positive returns for this year so far. We can also look at them by investment style. So we can say high dividend payments, low dividend payments, high PE, high beta stocks, low PE stocks. We can look at all sorts of different investment styles. I just picked low PE, and you can find, like, obviously a high dividend payment would be a low PE stock, okay? An emerging market, low PE stock, you can find a lot of that. Oil and gas, for the last 10, 15 years, oil and gas has been in a low PE space. And the reason is because we know what we have with oil and gas. So you're just, it's not a growth area. It's not like you're going to find a bunch of new oil and gas. You know what you have. You drill on the finds that you have. Financials, European financials. So all of these are low PE areas. Then we can also break it down by active and passive. We know that there is mostly passive because we've seen that before when we talked about that. It's predominantly a passive space, but there are active spaces in here. And you can see that there's different kinds. There's JP Morgan Research Enhanced Equity, a targeted value ETF, an ARC Innovation ETF. They've had a terrible year this year, but they substantially outperformed the market in 15, 16, 17, and 18, and 19. So we can look at small cap. We can look, all of these things are active. So you can also break them down by that. In essence, you can find an ETF to fit whatever you want to think about in terms of how do I want to play the market? How do I want to have my investments? Where do I want my investments? And you can buy an ETF with a very low cost entry and fees for the annual fees for the year. You can buy an ETF that's going to suit your needs.